It's Sunday the 30th of June 2019. I'm going to give you a technical analysis breakdown of some UK and US stocks. Let's get straight into it. Hi guys, it's Enny, aka the Noctrader, your friendly neighborhood swing trader, back again with another video. Remember to hit that like button, hit that subscribe button, and hit that alert button to get alerts on all my latest videos. I've got Facebook, Twitter, and Instagram at the Noctrader on all social media platforms. And if you check that description section below, you'll see a link to my mailing list. If you join my mailing list, you'll get priority access to my free training course I'm creating for all subscribers. I've also got a Discord group called Pip Talk. It's also in the description section below. If you click on that, you get a link to it and join the Discord community and discuss anything and everything to do with swing trading with me and some other guys in the group, guys and girls in the group. Yeah, so I've got quite a few stocks to cover today. In the Discord group, I've made it so that people can, on the watch list channel, people can post their the stocks that they want me to cover, and then we can cover it in these videos. But that doesn't mean you shouldn't comment in the comment section below. You should leave some comments as well of some stocks, because I look at the comment sections as well for any stocks that people want me to analyze. So anyway, let me get straight into it because we've got quite a lot of stocks to cover today. I've got 1 UK stock and 8 US stocks. If you see me check my phone, I'm just checking the stocks that I'm covering. So the first UK stock is ABF, Associated British Food. Now if you look at let's look at the weekly chart first. If you look at the weekly chart, it looks like it hit the support here at this price, which is let me make this full screen. So if you look at the weekly chart, price has been climbing, but it's been ebbing and flowing. It's been going up and down, ebbing and flowing. It looks like it's hit the bottom. Now it's going to climb up some more. The 188 simple moving average is above price and curving down, but I think price is still moving all the way on the way up. On the daily chart, you can see that it's been an ascending. It broke out a descending channel pattern, broke up, and then started consolidating. Now, what I've seen here is that it's becoming an expanding wedge has formed. So let me go to the 4-hour chart. First of all, look at the MACD. The MACD looks like it's ready to upturn. It's been trying to upturn a couple of times, but now the gradient looks quite sharp, and I feel like it's going to make a bullish move on the daily chart MACD. And on the 4-hour chart, oh yeah, guys, as well, apologies for the sound quality, but I'm using my headphones and my laptop speakers, so you might hear the hard drive humming, but I haven't been able to get rid of that sound in post-production, so you just have to bear with me. So look, there's been an expanding wedge forming, and the 188 simple moving average on the 4-hour chart is acting as a bit of a resistance, but I believe price is going to break out at least up, if not all the way to the top, but at least up just to this resistance line. Now whether price breaks above it, we don't know yet, but I think there's still a move to be made for price to go from here to here, which is about 130 pips, which is not too bad. The last time it made that upward movement, it took 3 days to make 145 pips. So I don't expect this move to take too long to mature. I can expect it to be a couple of days before price reaches the resistance line, and then we can decide from there where we want to go. So that's how I want to play this. I think it's a long position up to the resistance line of the expanding wedge for ABF long. Now off to the US stocks. Got quite a few US stocks this week. I think the whole thing with Trump and China's president agreeing, looks like they're going to agree on some sort of trade deal, or if not, they're moving towards steps towards agreeing on something. This is helping the market, and we've also got assumptions that the US Fed is going to cut interest rates. And if these two things happen, I think it's going to give the market the push that it needs to really rally up some more. I know there was all-time highs on the S&P recently, and I think it could push up a little bit more if these two things happen properly. If both the Fed and the China and US government agree on the trade deal and interest rates are cuts, this could really push the market up. So first things first, I'm going for Tesla. Tesla, fan favorite. as you can see here on the 4-hour chart, Tesla has been staying true to these resistance lines. This resistance line, this descending resistance line. Now, Tesla hit the support, hit this previous support at $178. Then it rallied back up, and now it looks like price has been treating the 180-day simple moving average on the 4-hour chart as a support. And I think now's the time that price is going to break out of this previous resistance that it's been staying true to, and then rally up at least to $26. So I believe Tesla can make its way from here all the way to at least $26, which is a 3,000 pip move, which is great. So I'm just waiting on Tesla to make a concerted effort to break out. Once it breaks out of here, I think a long position will be taken up until the resistance line at $26, which was a previous support. So that's how I would play Tesla. The MACD and the MACD is also telling me that it's kind of, it could potentially be a long position. Once again, it's been this shape. It's hard to explain it, but this shape I've seen it several times before. And when it's trying to break into the positive territory, but now it's making a bit more of a it's broken into the positive territory, but it's gonna curve up. I think it's gonna shoot up. So Tesla long. And if you look at the daily, you can see it a little bit better. That it just looks to me that the 15-day exponential moving average is also acting as a support. It just looks like Tesla has been consolidating here. For all I know, it might short, but that's why I would wait for it to actually hit this line. So what I'll do is that I'll set an alert on this line. Set an alert on this line so that once it breaks out of this line, it will shoot up to this. I'll take a long position. Next one is AMD. Now AMD, I actually made a mistake on this last time with my technical analysis. I initially thought that, let's go to the 4-hour chart. I initially thought that what I was seeing was actually head and shoulders. So I plotted a line here, but in reality it was just this was actually the resistance line for upturn. So I kind of miscalculated that. Good thing I didn't enter the trade, but I assumed this was the left shoulder, head, right shoulder. I thought it was going to sell down, but it did not do that. And after a bit of further analysis, I realized it was actually an ascending channel pattern. So you have to be wary though, because this red line was previous all-time high. But I'm going to have to move this line now, because if you look at the weekly chart, it's not all-time high, but recent all-time high. So if you look at the daily chart, I think I need to delete this line. So it's broken this the recent high, and I think that it could be rallying up some more. And as I said, the market just seems to be doing well right now. So I wouldn't discount AMD as a long position, but I think there's better long positions out there. I mainly covered this because I was wrong before, and I just wanted to kind of recap on how I now see AMD. I could see AMD climbing up some more, but I wouldn't take this long position because there's better long positions out there that I'm a bit more confident on. The next one is CL, crude oil. Crude oil, descending wedge pattern. I don't think this wedge is going to go all the way down to support, because this would take us back probably down to, wait, let me show you. So what I would say is that this there's been a descending wedge pattern where it's been ebbing and flowing between these supports and resistance lines. Now I think what's going to happen there is going to sell off, but not sell off all the way down. It's going to sell off to this previous resistance line, which was at $55. So what I would say is that a short position could be taken, and it could go all the way. Oops. It could go all the way to, let me get the ruler tool out. Where's the ruler tool? There it is. So you could take a short position, and that would be about just under 300 pips, and then set the stop loss just above here. So that's 230. That's about, it's nearly a 1-to-1 risk to reward, which is not the greatest, which is probably why I probably wouldn't take this position. If it was closer to the support, the resistance line, I might take a short position, but I still think that crude oil is going to rally down to at least 55, but I don't think it's going to go all the way down to the bottom. And so yeah, so that's how I'd play this. Next one is CXO. Covered this last time, but I'm just recapping on this again. Previously said that CXO might have been a short position because of the descending wedge pattern forming, but after further analysis, it looks like it might be a long position, because on the weekly chart, CXO hasn't managed to create the downward the bearish momentum necessary to break out of this 977 mark. It's tried several times, but it hasn't really broken out of it. And on the MACD, like bearish momentum has kind of dissipated. So on the 4-hour chart, it looks to me that price may has consolidated on this old support line, and now it looks like it's about to break up. But no assumption should be made. What I'd like to see is it to break out of this this resistance line. So break out of this resistance line and then consolidate on the resistance line, and then I'd take a long position on CXO, but I just have to wait out for now. The next one is EA, Electronic Arts, the gaming company. The gaming section have had a really rough year last year, but it looks like things are kind of turning now. As you can see there, from 2018. From July 2018 to about December, there was a big sell-off, both with EA, Electronic Arts, even Blizzard, Activision Blizzard. The gaming sector was just really having a lot of problems, but now it seems to be kind of bouncing back. MACD, RSI both look like it's going to it's making a bullish run. On the daily chart, the previous channel pattern resistance has now been reached. I think there's more bullish move for this to come. And on the 4-hour chart, if you look at the 4-hour chart, you can see exactly what I want to see. Channel pattern, there's been a channel pattern, price is broken out. It's kind of aggressive. Anyway, price is broken out, consolidated, and looks to carry on making high highs. I'll take a long position here, and the rule of thumb says that whatever the distance is in this channel pattern, which is about 800 pips, is where it's going to go. So I'd say another 800 pips would be about, yeah, here. So it'll be 10720 or something like that. So if I was to go along with this, I'd say my take profit would be around here. So I'd say a long position. Set your stop loss just below the new resistance line, and just let it rally up into this square, and then that's where you take your profit. That's how I play it. And then the next one is JetBlue. Where's JetBlue? JetBlue, this one looks kind of messy, but if you look at it properly, a pattern has been forming. As you can see, JetBlue has been making high highs but ebbing and flowing. It hasn't been going in one smooth motion. It's been going up a couple of weeks, down a couple of weeks, but it's been making high highs as it carries on. And now it's hit the bottom. I feel like it's turned and it's going to make its way up. The reason why is because a couple of things. There's serious confluence here, so a lot of different indicators are telling me the same thing. If you do a Fibonacci from here, from the base to the previous peak, recent peak, you can see that at key levels, it's where it's retraced. It's retraced here. It's retraced at about the 61 level. It's retraced near the 38 level, and now I think it's going to take a long position up to this level here based on Fibonacci. So, and this is a favorable position to take because you're going to make about 200 pips and potentially risk about 60. So that's maybe 4 to 1, 3 to 1. They're about 3.5 to 1%, 3.5 to 1 risk to reward ratio, which is pretty favorable. You can set a tight stop loss and then just see if it rallies up. But based off of my analysis, it looks like this could be a potential good long position. MACD's RSI all telling me Well, the RSI is not here, but the MACD is telling me it looks like it's hit the bottom and it's ready to peak, climb up again. Now on to some viewer requests. Two from Xavier. The two from Xavier are GE. Let me check what he said on GE. So I'm checking my phone just to see what he was. GE. Xavier says GE is a long mistake. So GE. So Xavier called out GE. He said GE is a ascending wedge. Ascending wedge. Stop loss 9.5995. Entry 11 and exit 12.5. I don't see an ascending wedge here. Personally, what I see here from GE is a let me see. What I see from G here is kind of like a channel pattern. Not really great, but like a little bit of channel pattern. I do think it's a long position because it's climbed up and then, well, not potentially a long, but the 180 simple moving average has come underneath the price and it looks like it's going to start climbing up, but not for the same reasons that you did, Xavier. I do think there potentially could be a long position, but you need to see it break out of this line first. You want to see it break out, consolidate, and then carry on going up. And then I would say take a long once it's broken out and consolidated. Then you can enter, set your stop loss just below the previous resistance and new support, and then just ride it up to 12.5 as you said. I see a channel pattern. I didn't really see a ascending wedge pattern, but if there's 150 pips here, then you'd want to take your profit at about 150 pips, which is kind of near 12.5 as you said. So that's kind of, I think we've come to the same conclusion but a different analysis. I like to know why Xavier said there was an ascending wedge, but yeah, I do think G is a potential long position and it looks like it could be a good position to take, but I'd say wait for it to break out of this kind of support line, the resistance line first, before you take a position. Next one is pump, which is a property holding. Okay, pump. Pump here. Okay, here's pump. Wow, it's already made a kind of big move up. Don't know if we might have missed it. Let's look at the. Yeah, pump's already kind of pumped up. I don't know if there's. Wait, so pump long just broke resistance. Okay, pump looks good, but it looks like it's already made a big move up, and I don't like taking positions on stocks that have already kind of moved up quite emphatically already, because I feel like it's gonna retrace once I enter it. I like to enter positions that have have more that haven't made their big move already. Like look here. So this would have been the point. Like this is how I would have analyzed it. Yeah, if you want to take a position on pump, I think pump's got more upside to give. I think it's going to go up some more, but I think now would be the best time to enter because it's already overextended. I would probably wait for a retracement. If not, just leave it, because you don't want to enter a position that's climbed up so much already, because the minute you enter, I can see it just coming back down a little bit and then going up, and you don't want to be in a red position for too long. So what I'd say is that for pump, to be honest, I'll just leave it because I think there's better trades out there. This one looks good. It looks like it was one that could have been entered at an earlier stage, but a lot of the move has been made. If it retraces back a little bit and then it looks like it's going to climb some more, then maybe enter. But as it stands, I wouldn't enter it now because it's gone up so much in such a short space of time that it might be due a retracement. So yeah, pump, not right now, but not necessarily never. I'd say I'd keep it on your watch list and just keep watching as it unfolds and see what happens. But you don't want to chase the trade, as I've said. So yeah, that's me, aka the Noctrader, signing out.